When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nellinger. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. It's nice enough to come on and talk about what's happening in the marketplace. Chip, how you doing today, bud?
Doing good, Casey. It's going to warm up this weekend, but boy, it's we've got a little dose of fall this week, so it's beautiful weather. Labor Day weekend's here.
Yep.
Markets are uncertain, waiting on what this crop size is going to be. We do every year, but it seems like this year there's more uncertainty about crop size than most years.
Yep. Yeah, the other most important thing about this weekend is September 1st, so most places it's opening day of dove season. So.
Oh, I thought you were going to say college football started too.
Hunting season, well, that's two. That's the second most important thing, right? But it's my favorite time of the year right now. So
I agree with you.
Good times. All right, let's talk a little bit about this report that's coming out. So the ProFarmer Tour came out. Every reason for the market to be very bearish with the information that came out of the ProFarmer Report, right? It was variable where they expected it to be. It was good where they expected it to be, and it was bad where they expected it to be bad, right? But with all the Russia-Ukraine overshadowing of what was going on there, it actually pushed the market lower, not only last week, but this week too. So I guess the September report comes out in about 12 days. And as you're looking at that, Chip, like you talked about, there should be some fireworks that happen in September, on September 12th. Now, whether that's up or down, whether that looks like, but you would think that there would be some very big upside potential here with this report. Yeah. So I guess, what are your thoughts there?
Yeah, I would agree with you. I'm going to correct you. You said bearish on ProFarmer, but I think
sorry,
you meant
bullish. I meant bullish.
Yeah, they came down from where the USDA was. They're at 172 versus USDA at 175.1. They were sub 50 on beans. I thought that was maybe the most bullish thing about ProFarmer. With USDA being just under 51. But, I would say a couple things with that. We rallied pretty sharply into the ProFarmer Report on the bean market. And so we were on prior to this week, almost $1.50 rally straight up. So we added a little bit of uncertainty and weather premium to the bean market. ProFarmer gave us a bullish number. We didn't rally on it, but I think a couple things are at play there. Number one, we had the end of the month yesterday. And the funds, I think, were taking some profits on the last trading day of the month and right ahead of a long holiday weekend. So this is our fourth one, I think, of the summer where this weather is just uncertain. You're setting up for some big volatility Monday night or Tuesday morning. And then, as you mentioned, about a week and a half from now, we've got the September crop report. So, I think you hit the nail on the head. It's highly variable crop. The one thing that I think is of note here is ProFarmer, in their projections, they always put a carrot there, and they say this is assuming a normal end to the growing season. And I'm going to argue with you that we're not really having a normal end to the growing season. We're not. We're going to heat up again. They're going to be north of 100 this weekend. Unfortunately, in the driest area where they need rain to finish this crop, they're not getting it. They're getting heat instead. It's pretty dry over here too. We've cooled down. We had some record heat here a week ago. It's going to get warm this weekend, the mid 90s. But the key here is we're ending on a dry note, and producers are now starting to say, "Hey, my corn isn't drying down; it's dying." That's not what is conducive to holding together, the second or third biggest crop we've ever raised across the Corn Belt, across the country. And beans here, many areas of beans, just not getting enough rain over the last 30 days. Pods aren't filling, potentially pods aborting. This heat won't do, northern Iowa or southern Minnesota any favors. And so that kind of creates all these questions about the September crop report. It is the first report of the year that we get actual field surveys from the USDA. So, they should be starting that actually as we speak here. The last couple days of August, the first 3 or 4 days, 5 days of September is when they do those surveys. And so if there has been any of those issues with yields coming down, shallow kernel, hordes of boarding, stuff like that, they should be able to pick that up in their field surveys. And so to your point, this September crop report really is going to set the stage for some potential fireworks. Number one, I think we're going to see some potential fireworks Monday night and Tuesday coming out of the long weekend, depending on what the forecast says. If it stays hot and dry out through, the second, third week of September, we're out of time at that point. It's too little too late at that point. And so we could have some fireworks even coming out of Labor Day weekend. And then, then the market will be positioning for the September crop report. And who knows, there's areas that have received better rains and they're maybe just about as good as a year ago. But then there's areas that are kind of falling on their face here over the last 30 days with dry weather. So we're setting up for, some potential volatility going right into harvest. Harvest is slowly starting, to the south, southern Illinois, southern Indiana, Kentucky, kind of slowly getting a start in here. And so I think over the next week to 10 days, you're going to also start having some more harvest data out of that southern portion of the Corn Belt.
Yeah. So this week I went to a meeting up in Ames, Iowa, and as I was driving through there, I was taking a look at the fields, and they weren't as uniform as they have been in the past. There was a lot of tall sections, short sections. I mean, there was just kind of everything. But to your point, where you're talking about farmers that were saying, "Hey, my corn's not drying down; it's dying." There were several fields that I went through driving down I-80 that you could look out in the field, and you could see patches of the field it looked like October corn, not early September corn. I mean, it was dried all the way down. It was, what you'd expect to put on your porch during Halloween. That's what it looked like. So it was, some of that stuff was in bad shape, and you could really see what they were talking about when you looked through the variability of the field, where there wasn't a levelness that you would typically see, and so, Western Illinois or Western Iowa was one of those areas too, where they found some of that, Eastern Nebraska is where they found some of that highly variable, crop production kind of rate where they're at, as far as that goes. So it's out there, and it's going to be interesting to see what the USDA comes back with as that data starts coming back through.
Yeah, for sure. And like I said, there's always uncertainty with yields every year, but I think with all the variable weather, we've had everything this year. Wind, hail, drought in June, normal weather in July, drought again in August. And I think the key to what you're saying there is in some of these areas that finally got a little bit of rain in July and the first week or 10 days of August. They came into it with no subsoil moisture. Especially in the Western Corn Belt. They came out of a drought last year. They weren't really healed up from that drought. They finally started getting some rain, and then the rain shut off again. But we hadn't had enough, moisture to kind of recharge the subsoil. So, then the rains shut off again, and it kind of stressed those crops again. And I'm not an agronomist by any stretch, right? I could be as wrong as the next guy, but I've been doing this a long time, and when people say things like, "Oh man, this corn's green. I don't know when I'm going to harvest. It's going to be, Thanksgiving before I finish harvest. That's kind of the finish you want to solidify big yields. Now people are saying, oh man, I'm going to start 10 days ahead of when I thought. That's never good. That's always, always, always at the expense of yield, in my opinion. And so that seems to be what we're rushing into here. In fact, I talked to one guy. He was going to go to the Farm Progress show earlier this week, and he's like, man, I was going to go, but I walked a few fields, and I'm not even ready. I thought I was going to have a couple weeks, but I'm going to have to go to harvest sooner than I thought. So, unfortunately, and he's one of the better areas here in part of northern Illinois that receives some better rains, and then it just shut off again. So it's going to be a real wild card. And, I think the one thing from that ProFarmer is corn, if you notice, very quietly stopped going down. Wheat made a new low, just battered every day this week almost. New contract lows in wheat. We had a sell-off in beans. Corn's holding its own in there. So I think that potentially the market's maybe starting to hear some of these very early yields, and I've heard a couple myself. They've been a little bit disappointing to a lot disappointing. Too early to get a real trend from that, though. I would caution, but maybe the market, in the case of corn, is finally saying maybe we got a little too ahead of ourselves here, thinking we've got a 175, 176 crop, and maybe there's a chance we're going to end up closer to 170. If we're under 170, not even necessarily on this September crop report, we end up under 170, we're going to get a nice rally attempt out of this, and it might come, through the middle to tail end of harvest. Beans are part of this too, and there's just no margin for error on beans. We've talked about this. The domestic demand, we've got basically record crush margins. You're starting to see soy oil heat up again. We're just selling soy meal, massive demand in soy meal because of the drought in Argentina and the effects of that. And so we can't afford to lose one bushel on wheat, or I should say on beans, and otherwise it just gets critically tight on the balance sheet. And so if that's going to be the case, beans haven't seen their highs yet. If beans haven't seen their highs yet, it's going to drag corn along kicking and screaming if it has to. So there's some things to be positive about, but with that being said, it's the USDA, and so if they come out unchanged, or they go up a bushel in corn, up a half a bushel in beans, that's really going to pull the rug out from under the market bulls. And the funds have a pretty long position built up in beans, not restrictively long, but they're hitting 80,000+ contracts long. And so if we can't feed some bullish news, that may set the stage for a deeper break into harvest. So it's really critical. The September crop report really could set the stage for what price action does all the way through harvest and beyond.
Yeah. So that's my next topic I want to talk to you about. Let's talk a little bit about energy, what you see happening there. Oil has done some pretty remarkable things this week. You got up over that $82 mark, and you're up into the, above 85. I think would you say is about $86 or something like that?
Just under 86. Up sharply here. Looks like we're going to go out basically on the highs of the week. 85, 86 is the last trade on October crude oil. And as one of the things driving this is we've talked about this. I don't want to be too cynical. We're trying to refill the strategic reserve. That was the greatest trade of all time, gone wrong. Maybe the worst trade of all time. And so, at a time when we've kind of tightened up supplies, at a time that there's still a little bit of geopolitical uncertainty with Iran, Saudi Arabia. Now we're just going to leak out that we're going to start slowly rebuilding the strategic reserve now that we're back over 80 when we had a chance to do it in the 60s. And
3 times,
the market,
by the way.
What's it? Oh yeah, 3 times.
3 times, yeah.
And that's a great way to put support in the crude oil market, knowing that the U.S. government has their finger on the buy button. And so path of least resistance is for higher. So surprise, surprise, here's where we're at, knocking on the door, $86, and strong week. Looks like on a textbook bull flag breakout to the upside on a weekly chart. Next logical targets are in the low 90s. So that's about the summary of crude oil, right? It punishes the most people and takes the most money, and it's going to take the most money from you and I as U.S. taxpayers because of their great trading ability.
Yeah, that's a whole other podcast sometime. But they have, as you look at where the price is now, it's really going to be starting to be more supportive for ethanol, and we start looking at crush rates, and it's what you talked about. If we go into this, there's one of them, I can't remember who it was, did do some lowered from 175 to I think 173 and some change or something like that on the corn bushels, average bushels an acre. But if you look like you talked about in all the reports coming out about aborted soybean pods and those kind of things, as you're looking at that, you start throwing all of this biofuel back into the mix, that gets tight pretty quick, just like you talked about. So I guess as you're looking at where the price of diesel and gasoline is right now and oil is right now, how do you see that ethanol and biodiesel coming into play there, and what's that look like in your opinion?
Yeah, it's screaming higher in the case of the energy products, diesel and unleaded. It's playing right into profitability. We already had massive crush margins domestically in the United States. I mean, like $2 plus a bushel. I think the last time I checked, they were closer to $2.50 a bushel positive margins. And so just take that into consideration that soybean crushers here domestically, we've brought on several plants of renewable diesel over the last 6 months, say. But beyond that, there's a large crush capacity already in the United States. And it's just a margin business, right? Meal and oil are so high relative to beans that crush margins are so positive. It doesn't matter if beans are $15, $16, $18, $22 a bushel in the case of crushers. If it's profitable, they will buy beans and they will sell meal and oil, and they will lock a profit in doing so no matter what the price. That's a pretty good demand driver. And this rally in the energy products is only breathing some, extra bullishness into the domestic crush rates. Our ethanol grind has backed off a little bit. There's been some people saying, oh, that's this demand, and we're not going to have any demand, and we're not exporting anything. It's normal this time of year, right ahead of harvest, that plants take some downtime. They do some maintenance. They get ready for the new harvest. So that's going to come roaring back, in my opinion. And, that's a good demand driver, especially in beans. This thing, I don't, there's still people out there saying, oh, bean demand's too high. Bean demand is too high. Maybe it is. Maybe the exports are going to come down a little bit, but maybe it's going to be more than offset by domestic crush because it's so profitable right now. And all of a sudden, net demand, maybe it goes up in beans. So that would shock some people. I know the one real bright spot we've got going right now is domestic bean demand. Soy oil, we're selling, or I should say soy meal sales have been stellar because we're picking up the slack of what Argentina is not exporting. Soy oil, recent nice rally here this week because of the rally in crude oil prices. That's just adding additional, potential premium to the biodiesel market. So that's a real bright spot as I see it, especially if the USDA comes out on September 12th and cuts bean yields. It could be an explosive, bullish, piece of information that really goes a long way towards giving us a big rally here. And I don't want to get too bulled up. I know we're just trading $14. That's relatively high price, but our exports should only start increasing now as we get into harvest and beyond. B, right, crush margins are record, and they're not going away anytime soon. The crushers are going to keep buying beans as fast as they can get them to lock those margins in. So it's a good combination to have.
Sure, right on. All right, last topic here. Let's take a look over at the protein markets when you're looking at cattle and hogs. What do you see happening there? And again, there's a lot of topsy-turviness going on there as well.
Yeah, there's been real choppy markets in cattle. I think they tried to break this market earlier in the week, basically, kind of Labor Day type selling into the month, a little bit of fun profit taking, but they couldn't get the job done, and it rallied instead. So, I think the cattle market's on some pretty good footing in here. They've tried to break it. We are off the highs some, But I think cattle still look really good to me going into winter. Hogs have had some really choppy trade here, and I think part of the issue with hogs is the deferreds, the October and the December, have gotten too far ahead of themselves, too far of a discount to where cash has been, and the cash has come down, but we had such a huge premium in the deferreds that they're kind of stretched the rubber band too far. So they may have actually seen the lows in the October contract just simply because they got too far ahead of themselves and too discounted compared to where the cash has, even though it's broke here over the last 2 or 3 weeks.
Yep. Okay, man. Well, Chip, good place to stop. Folks want to reach out to you, get more information about what's happening over at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just give us a call at our office, 309-550-7213. Love to chat with you. A lot going on here with these markets. Definitely not a time as it gets busy with harvest to put the markets on the back burner here, because there's a lot of opportunity maybe close at hand here.
Right on. Okay. Chip, appreciate you being on, man. Look forward to next week.
Thanks. Have a happy Labor Day, and get some R&R. Go hunting, watch some football.
I will do all of those things. So I look forward to it. You do the same, man. We'll talk to you next week.
All right. Thanks a lot.
All right. Thanks, Chip. Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and go over to the YouTube channel, which is the Moving Iron Podcast. YouTube will go to everything Moving Iron related at MovingIronLLC.com, and you can get all the information about anything you want there at MovingIronLLC.com. So with that, I'm Casey Seymour with Chip Nellinger. Let's move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.